All right, here it is. If you failed to plan, then you are planning to fail. All right, so the gold bull era is underway. The silver bull era, for some, could already be on the way. If we get a monthly close above that 20, 21, 22 level, then there's no denying it. So what's my plan? Sometimes you just post ideas and then you say, this is going to go to that price, and then you move on. You do another post on another ticker. But how exactly am I going to play this? So this is my customized playbook, how I'm going to play this godlike gold and silver bull era that's going to be unfolding, that's already started. So we'll get to see. I did this post there on Gold Tent fully. He asked me how you would have played it back in 99, or not 99, but after the crash of 2009 to 2011 or 13, how I would have played it. And that was actually probably the easiest way for me to highlight, showcase my framework, because there was practically no whipsaws. The trend was beautiful, it was going up. It really fit nicely with how I saw things, where I enter, where I exit. And that's why you need a plan. You need a plan before. Everybody tells you that, because if you don't have a plan, then the price action will have a plan for you. Your emotions are going to get in, and you're going to get whipsawed. You're going to look for advice, and you won't know what the hell's happening. You won't see the big picture. So it takes time, but you really need to find a plan. And what I've realized over the years, at the beginning, let's say I looked at the Stan Weinstein or framework. I read, I absorbed whatever he had to give, and then I just try to apply it for many years. And then after that, there's some stuff that doesn't fit your profile. It's too fast, the exits, or it's not fast enough. You'd like to take profits, and he doesn't cover it the same way you'd like to. And then you start seeking out other information. You read books on Mark Minervini. You could read books Peter Brandt or a whole bunch of other people. And then you take elements of their frameworks, or you can even try their frameworks as a whole at the beginning and not even ask you any questions, just to test it out to see if it's like the best framework ever. But eventually for me, what happened is that I took pieces and parts of that. So I had the Stan Weinstein base. Then I went on to do classical chart trading, Peter Brandt, the legend in that field, monthly or breakouts, important breakouts, measured moves. That's where I got, whenever you see me do measured moves, I got that from my classical chart trading framework. And then you start fitting that. And even after that, it doesn't have to be from legends, just from Gold 10. I picked up a whole bunch of stuff. From North Star, I got the arcs. The visual representation of stages, right? The arcs going like that. So you have the stage 4, the basing, then the incline. It's very telling for me. So that's probably an element I'm going to keep, especially for bottoms, and then how to get on. From fully at Gold 10, I got the TSI, True Strength Index. On the monthly chart, it gives very clear signals. I like how it behaves in the precious metals complex. And that's another thing I like about my timing with the gold medal bull run that's happening right now. It does fit. I've read that somebody posted that it fits very well with classic chart trading frameworks. It respects very well how look, even here, Stan Weinstein systems. So let's jump in. Let's go back. 2009, 2013. Stan Weinstein. Here's a basic premise. You get in above an inclining 30-week moving average, outperforming the SPX or whatever index your instrument's in. You need volume, etc. So I'm taking this element right now. I'm just taking the 30-week moving average for Stan. I'm taking the add on continuation breakouts right there above breakout lines. And I'm taking important trend line. If he had a 4-point trend line, a break on the 5th, you exit, or 3-point trend line and break on the 4th, you'd exit. And this is the other rules. Close below 30-week moving average, you're out. close below important neckline, you're out. Important trend line, you have one here, you're out. So 2009, 2013 is just beautiful. Always, never closing. Once we broke out here, so this probably be your first position. Never closing below 30 moving average. Just beautiful all along the way. And then you have opportunities to add here, add here, add here, add here. And then you would exit right here on this candle. And you never get another chance to get back in. Never close above that important resistance right here. And I didn't do it this way, but you always have to look on the monthly chart. Monthly chart is going to help you reduce whipsaws. It's going to help you maximize or minimize those whipsaws. So you're going to avoid losing those position size. You won't get emotionally distraught, or you won't give up. And then after that, it's just sometimes you have the good idea that it's going to go up the price action, but it just doesn't take off because you forgot that there was important monthly defined resistance. And then after that, you give up on the gold market. But then 1 year later, gold market explodes and you say, ah. So here's what I added for that 2009-2013 run. So here I have Stan Weinstein, super basic, with multiple entry points. And that's what I didn't like too much about Stan. Sometimes he always made you sell into weakness and not into strength. And how can you sell into strength? But people, I sold into strength. There was a rally. Yeah, but how did you? I need a chart. I need indicators. I need past behavior. So right here, I'm drawing monthly defined resistance on the distance from the 30-week moving average. So right here, that's how gold behaves. Oh, I'm stretched above about that 20% line. Okay, going back down. Next time it happens, oh, went back down. So you're starting to define that resistance. So right here, this, if you would have been in, but we were not in here. This is our initial position. You would have exited right here. Look, 3 times, 1, 2, 3, many times. This has rarely been surpassed. It's a good opportunity to take some off the top. You want to take everything off? It's up to you. I'm probably gonna have to refine that in my own framework. But definitely a good opportunity to take some off the table. And as it peaks, you have many months that go by, sideways move. You don't have to worry about anything. And here's another one right here. Here's the blow off top, hitting the top here. And what's pretty cool about this is this would have permitted me, Stan would have never permitted you to sell at the top. Never. It's impossible. He makes you sell into weakness right here. And this, you would have been able to sell the top. If ever it goes back up, then you probably would have entered on a continuation breakout. But right here, we would have probably been able to take some off the table right there at the top, which would have been a pretty cool bragging rights. Hey, I sold at 1900 gold. Not many people can say that. What else? So now let's make it even more versatile. Stan makes you add at breakouts. So breakouts often you're not gonna buy at the bottom. You're gonna have to wait. The price already gonna be extended away. You're gonna be in a spot where usually within 1 to 3 months you're gonna have a pullback to your breakout line. So you buy, you go up. He doesn't make you sell. The price goes action back down, and then you say, "Oh, I barely made anything," and then you give up on the trade. You could panic sell, etc. You don't maximize. So me, what I added, and this is again with that distance from the moving average, I call this fear entry points, because remember, nobody thinks about buying here because they're scared, the trend's going down, etc. But if your weight of evidence, the monthly chart's in your favor, the whole precious metals complex is in your favor, everything's going up, then these are low risk entry points, guys. So every time you see right here, 30-week moving average right here, oh no, it's going down. It's the opposite. This is contrarian thinking right here, contrarian to your emotions. So this permits me to have 5 extra. I would have had 5 extra entry points right here. Low risk, high reward. This is the ones that you say, wow, it's never coming even back to test that, right? Since you're inclining, you're never going to test those entry points. You should always be testing them higher and higher. These are great entry points right there. So my framework right now is a collage of Stan, a collage of classic chart trading framework on the higher time frame, the 12-month moving average on the higher time frame, everything to make it more versatile, less whipsaws, and have a high confidence level. entry points. I'm adding 5 more entry points. You keep adding on, so you don't have to go 100% right here. You keep adding along the way, and you still have the same rules to exit right here. Those haven't changed. The framework is looking pretty sweet from this on. So right now I'm building something that's fitting my profiles, fitting my needs. I even haven't talked about even the arcs or other systems, other technical things. This is just basic. You're in a bull run, you've done your homework, and then you just want to see once it's riding. You want to keep it simple. You want indicators to get in and out, signals to get in and out, where to take profits, and this will do it for you. So here we are. This is applying it today. So you saw how we built it. We had 5 entry points. We're already starting to have these add on continuation breakout. We had one right here in the late. Here's the initial entry, early entry. We haven't the monthly defined breakout yet. So somebody could have said, okay, I'm going to take a small position here, and then after that, I didn't mention it here, but on that close right here, you could have probably, that's a monthly defined breakout. You could have added a position. Consolidation, now it sucks because you got in on that breakout, and the price action goes back below, but you're still above an inclining 3-week average, so it's all good here. And once you bounce off, you're starting to define that inclining trend line. It's still not complete. You need 3 touches of it, and then continuation breakout right here. All good. It's starting to take shape. You're starting to grab momentum. But the more you wait, the less and less these add on continuation breakouts are going to have chances of appearing, and you'll be closer to potential top. So this right here, this is early. Most people should have entered here. This would be in the optimal sweet spot right here. And if you haven't entered here, I think you're going to have to wait until you get a pullback to the 30-week moving average. So you're going to wait here. Here we already had the first sell point right here, extended. Here, this is the one from the 2011 peak at 20% or above 20%. And these are the recent ones, recent memories, moving average, distance that would refuse to go up. Here, excellent chance to, as soon as it starts turning back down, excellent chance to sell into that, and so that's still strength. And here you buy into that weakness, that fear. So you already had a chance to sell, take some profits from your early entry. Here you have a chance already to add back on. And now you're starting to find that trend line bouncing off the 30-week average. It's just beautiful. And here is what's coming up. Is it 2 sell points? I don't know which one is going to be. If we blast through that one, then you might want to take a little bit off the table here. And if it really starts turning down, maybe take out even more, or else this is always an option that we might get here. But don't always assume that you're going to go all the way back here. I really like to have a retest of those high levels to prove that we could get there before skipping the step and saying, look, I'm going to wait for these higher extension from the 30-week average. Look, as long as you don't close below 30-week average, as long as you're above a trend line, even somebody here who didn't want to do all this to maximize their returns, they could have just bought here or bought at 1400 or 1350 once we closed above and just went to sleep, put all their NAV there, not very good risk money management, and or whatever they want to risk for that trade, and just go to sleep. But for a trader, for a swing trader especially, keep that trade, and you don't like not sleeping at night here when it corrects. A correction could last many months. You don't want to do that, especially here when we start getting to these areas here. There will be a correction, and then can last many months on your emotions, etc. So guys, this is the framework. You don't need more than that. Remember this, keep this posted on your desk. As long as these things haven't happened, you're good to go. That's it for me, man. So this is my playbook for the gold and silver bull era. And the way it's starting now, it's really starting closing on that 30-week average, just like we did in 2009, 2011. I'm not saying the macros are the same as there. I'm just saying the chart is behaving like that. And the angle of ascent is just beautiful. And hopefully we get many more of these continuation breakouts on the way, guys. That's it. Thanks for watching. If you like it, don't forget to like and subscribe. Ciao, guys.